It's your boy Orlando, aka King Smitty, and welcome back to my trading journey. Today I have two banger stocks that I'm looking into just pouring money into during these interest rate cuts. And before we get started, listen, I know you want to skip this video,
I know this.
but I have bangers, two bangers. When I say bangers, I mean yeah. So just bear with me. Check out these two stocks that I'm pouring money into, and let me give my reasoning behind them. But before we get started, hit that like and subscribe button. We're trying to get our way to 500 subscribers. If you're on Facebook, share the video. But the first stock I want to talk about is SoFi, ticker symbol SOFI. I'm not bringing up any charts. There's no technical analysis this time. I'm going straight fundamentals. So with SoFi, since they are cutting interest rates, there is going to be an increased borrowing demand, right? Lower interest rates typically encourage consumers and businesses to borrow more. Why? Because it's not a high interest rate at this point, right? So, leading to increased loan demands can boost SoFi's profitability. And we love it when companies are profitable, right? Refinancing opportunities. People who already have credit cards, home loans, auto loans with SoFi or even with other banks can now refinance to lower rates. Interest rates has been rising, shall I say, for the last 2 years consistently. And people still bought homes at higher interest rates. They still got cars at higher interest rates. Credit cards were increasing their interest rates, but they still been using them. Now that interest rates are lowering, this is time for consumers to now refinance at lower rates, right? And if SoFi can provide lower rates than some of the consumers, well, not consumers, sorry, if they can provide lower rates than some of their competitors, then they can get more consumers and even maintain the relationship that they have with their already customers. And maintaining relationships is really big in the banking industry. Next, improved loan performance. Lower rates, interest rates can help borrowers manage their debt, manage their money a little bit better. Since interest rates aren't knocking them upside their head, now they can pay their debts without having to go into default, right? Rather than getting late payments, although late payments that do increase profitability, but nobody wants late payments. I would just say increase profitability is because now you can hit with late fees and whatnot. But nobody wants that. But with lower interest rates, now consumers can better manage their debt and pay off. Because they refinance, now they have a lower monthly bill, which would be easier for them to pay, right? And like I was saying earlier, if SoFi can provide the lower rates, now they have a competitive advantage over traditional banks. Because SoFi is more of a fintech. So they don't really have a brick and mortar like that. I mean, they are working their way towards that, but they're mostly online. So they can move a little bit quicker than the traditional banks can. And if they can continue to do that, they can attract more customers and enhance its market share, gaining more and more market share. Because market share is like a pie, it's 100%. And the traditional banks, let's say they had 90% of it. But once the fintechs came around, they were feeling a need that traditional banks couldn't do. So that market share of the traditional banks owning 90% of the entire consumer population, let's say now they own 80%. And fintechs like SoFi and like Square, I think they're just opening like banks and stuff too now. Not like fintechs. I think they own Cash App, and Cash Apps have traditional banks and stuff now. Banking like checking and savings accounts now. They're starting to gain more of a market share, right? PayPal, things like that, and now a lot of the, especially with the younger generation, they love Cash App, they love Zelle, they love SoFi, things that are coming to them, right? So if SoFi can continue to gain market share, they'll continue to push forward towards profitability, making this a very great stock to invest in. And then with interest rates lowering, it gives people the opportunity to invest more. Now they have a little bit more money in their checks. So now they can reach out to SoFi for investment products, right? Because now they have a possibility of beating the cost per living. Because, previously, or recently, in the short term recently, interest rates was like 7%, wasn't it? Or something like that? Or 6%. But raises on the job were only like 1%, 2%. Interest rates on CDs were like 4%. So it's like it's not keeping up with the cost of living. But as interest rates go down, if they can start to invest their money in things that they see that are safe and can beat the interest rates, they'll do that. So that's my first stock, is SoFi. I love SoFi, investing into it. I've made a lot of money buying and selling. Buy low, sell high. The second one is ticker symbol TMF, which is the Direxion Daily 20 plus year Treasury Bull. 3 times the share. So that's triple leverage. And these are treasuries. The reason I say this is because of price appreciation. As interest rates go higher, treasuries go lower, and vice versa. So as interest rates fall, treasuries rise. And we're at the point now where we are trying to lower interest rates. We, as in the feds. So they are trying to lower interest rates, and as they lower interest rates, treasury bonds will rise. And then with TMF, instead of it just rising, it's rising at a triple leverage. So whatever it rises by, times that by 3. Right? So that 3 times should bring a significant price appreciation for this stock. Right? And then rate cuts often indicate a more accommodative monetary policy, right? Which can boost investor sentiment towards safer assets. A safer asset such as treasuries. So because some people, they don't have a high tolerance for risk. They work hard for this money. They don't want to put it in, stocks that could go up or could fall heavily, right? They don't want to risk it. They heard stories about the stock market. They feel like they don't have the money for real estate. So they want to put their money into something safe, like certificates of deposits or treasuries. And with higher sentiment towards the bonds, since interest rates are falling and treasury bonds are rising, with higher sentiment towards it, drives up the demand for it. As the demand goes up for it, the price will rise. Right, so those are the 2 stocks. And see, I didn't keep you long. But my 2 stocks I'm looking for is SoFi and TMF. Now let me know in the comments, as the Federal Reserve is dropping interest rates, what stocks are you looking to invest your money in? Then let me know why. Because maybe you have good reasons on why you're invested into them as interest rates are dropping. So let me know in the comments. I appreciate y'all for rocking with me. Don't forget to like and subscribe. And love y'all boys and girls.